This is Reuters Today. Coming up, Microsoft Windows chief heads for the door. And Lamborghini unveils its new supercar in the millionaire capital of the world. We start, though, in Brussels, where Greece has won more time, but not yet more money to deal with its debt problems. This time, the can has been kicked as far as November 20th, when the Eurogroup will meet again. But EU Commissioner Olli Rehn says progress is being made.
Greece has already improved its structural balance by no less than 13 percentage points of GDP since 2010. And this margin will increase further with the implementation of the additional measures foreseen for 2013 and 2014. I hope that all those who openly dismiss the potential of this programme to restore fiscal sustainability by Greece will dwell on these important figures.
Reuters' Jamie McGeever has been at the Eurogroup meeting and joins me now from Brussels. Jamie, some disagreements between Christine Lagarde and Jean-Claude Juncker late last night.
Indeed, Axel, but let's start with what they have agreed on. 2 years extra for Greece to meet its deficit targets and its debt targets. That means 2% of deficit of GDP by 2016 and 120% debt to GDP ratio by 2022. Now, that last extension was the source of disagreement, the bone of contention between Lagarde and the IMF on one hand, Jean-Claude Juncker and the EU on the other. Christine Lagarde very much against that extension. She thinks debt sustainability for Greece is the key issue that has to be addressed. It's not been addressed yet, and that 2-year extension opens up a funding gap of how to keep Greece solvent for that extra 2 years of around 33 billion euros. No agreement last night on how that gap is going to be plugged, who's going to pay for it and how. One senior Eurozone official told me last night all options are being discussed about how to do that. We can expect some agreement next week, as you hinted. But one option is not being discussed, flatly ruled out, and that is the ECB and Eurozone governments taking a loss on their Greek bond holdings. That is off the table, although many would say that is the only thing that's going to bring Greece's massive debt load right back down again. OK,
very quickly, Jamie, what are the finance ministers talking about today?
Well, today is ECOFIN, so it's the EU finance ministers, not just Eurozone. They will be discussing the budget, which will be obviously discussed in more detail, and hopefully some agreement reached upon at the end of the month with a full-blown summit. And they will also be discussing banking supervision and banking union. Don't forget, the ECB is scheduled to take supervisory control of the Eurozone 6,000 banks by January 2013. That's not going to happen, of course. That will be extended sometime down the line.
All right, Jamie, thanks a lot. Jamie McGeever in Brussels for us. We'll get some market reaction to that in just a sec. But let's not forget that Congress comes back today to confront the fiscal cliff. They've now got 7 weeks to reach an agreement on scheduled tax hikes and budget cuts that threaten to trigger another recession. Let's get to the London Stock Exchange. Michael Leister, senior rate strategist, Commerzbank, joins us. Michael, let's start with the fiscal cliff. Congress getting back together today. What are the markets in particular looking out for?
Well, any sort of positive news or any sort of indications for compromise will be welcomed, given that indeed the fiscal cliff has moved center stage last week, hitting equities hard and risk assets in general. And
do you expect anything?
Well, we had some constructive news flow over the night with sources close to Romney or the Republicans suggesting that indeed the willingness for compromise has increased. So there seems to be something in it, but we shouldn't get carried away. And overall, I guess for now, politicians will not show their cards entirely and rather sort of wait a bit further down the line.
All right, let's get your word on Europe. How we get there seems to be the new problem. This spat between the EU and the IMF, not good for markets, not good for volatility or risk.
Yeah, exactly. As you said, we know pretty much what has to be achieved in the end, i.e., giving Greece or providing Greece with more money. But how we get there is actually quite a difficult question. And as we've heard before, the IMF and EU are very much at odds, and this is unnerving the market because once again, there's a lot of haggling with regards to Greece, and a hard default cannot be ruled out. So tail risks are increasing again.
And of course, this whole spat can be transferred to Spain as well pretty soon, I imagine.
Yeah, absolutely. It's a bit of the same story. So it's pretty clear that Spain should ask for a bailout, and from all sides we get these comments. but Rajoy and the Spanish government, they seem very reluctant, and also here, the further or the longer they wait, the more uncomfortable the market will get with this situation.
Thanks a lot, Michael. In other news, British energy regulators are to investigate claims made by a whistleblower that UK traders manipulated wholesale prices on Europe's biggest gas market. The alleged manipulation of the UK's day-ahead gas contract comes as consumers struggle with rising energy bills. Meanwhile, Germany's largest utility, E.ON, has slashed its outlook in a surprise move Monday night, citing deteriorating business and regulation for weakening electricity demand in Europe. Fewer calls made by consumers in Spain and Italy have forced Vodafone to write down the value of its businesses there by £6 billion and lower its full-year outlook. The news comes as the company reported its first fall since 2010 in its key organic service revenue metric. Finally, the executive most widely tipped to be Microsoft's new chief has quit unexpectedly. Steve Sinofsky, head of Windows and Bill Gates' former technical assistant, is the latest in a line of high-profile departures as the company struggles to keep pace with rival Apple. The decision comes barely 2 weeks after the launch of the flagship Windows 8 product. That's it. I'll leave you today with a glimpse of Lamborghini's new supercar. The new Aventador Roadster was unveiled at a world preview held in Singapore. The 12-cylinder 700-horsepower engine drives the model from 0 to 60 in 3 seconds. It'll hit showrooms in late spring with a list price of $445,000, a snip for many on the island, which is home to the world's highest concentration of millionaires. 45 Lamborghinis were bought in Singapore between January and September, along with 64 Ferraris, 63 Maseratis, 41 Rolls-Royces, and 29 McLarens. I'm Axel Threlfall. This is Reuters.